And we back again at it with another video. It's Monday, a brand new week, the first week in November, and we coming to you again. It's currently 11:42 a.m. on the charts, but since daylight saving happened and nobody can tell me, it's 12:42 in Guyana, and it kind of looks like I won't be finding any trades based on this price action that's going on in the charts. We had that impulsive candle, that bearish candle at 9 a.m. New York time, then that 10 a.m. wick, and currently we looking like we want to retrace a back up for the 11 a.m. close. I don't see an opportunity in this for me because the prices are a little bit too volatile for my liking. But hey, you never know. An opportunity could still arise, and once that come up, then as you know the vibe, I'm gonna fill you in. There is something that I want to discuss, but I just don't know how we're going to go about discussing it. But I know for sure we have to discuss it. And I'm going to create a separate video for that. But I believe it's something that a lot of people don't talk about that might help change somebody's perspective of progress. You know, the way they see progress. But that's something for another video. By the way, if y'all rock with B-rolls, you know, every time you change in the scene, for those who don't know what B-roll is, I might even know what B-roll is myself. But when you're changing the scene, you just, show somewhere of something else and get some music playing in the background. Do you vibe that kind of content or transition, or like how we there right now is fine? Like, yeah, let me know, because I put some in the last video and based on the analytics, I don't think y'all really rock with that, but let me know, you know? And we are back like clockwork. It looks like I might have an opportunity here on US 30, but I did something I don't usually do, which is drop down to the 15-minute before I actually place a trade. I know they're counterintuitive, or I could say that going against what everybody else says about trading, that you should drop down to the lower time frames to get your entry. But I am mainly taking my entries off of the hourly, and I'm analyzing the 4-hour and the daily chart to get a sense of market sentiment or direction, or whether I'm bullish or bearish for the day. However, dropping down to the 15, I can still see some information about the price and what it might want to do. For starters, there is still a little gap down here on the 15, and it's just below this little pullback that is formed on this retracement. So it's possible that price might want to just come down with the pullback, touch that fair value gap, and then start going up, which not coincidentally is where my stop loss is. So I'm cautious about this one. I haven't actually entered the trade as yet. If I did, it would be on this bearish candle right at 15 minutes after 12 according to the chart. And it would be right here at 12 o'clock hourly candle. So now this would make one full hour I'd be in this trade, but I'm still at the entry. And the thing about most of my trades, when I back test it, most of my winning trades, that is, from the time I enter, we start pushing in one direction or the other. Is either I know whether I'm going to lose because we push against me heavily from the time I enter the trade, or we just wick the entry and just start shooting up, or it's a buy stop and we just start shooting up. That doesn't say I don't have trades where I'm going to be in drawdown and it's still gonna win, but majority of them, like 95 out of 100, gonna not give drawdown. It's just going to barely linger around the entry, and then we're going to go up. We might still see a retracement on the way to take profit. It's not going to always go to take profit, but the chances of the price coming down back to my entry or lingering at my entry then going to take profit is much less likely. So I've studied all this information about my back testing and about my trading system. So I just thought I could bring it into you as a reasoning to why I'm doing certain things and why I'm making certain decisions. So yeah, as it is right now, I'm still in this trade, but once I click buy, if I'm clicking buy, then I'm going to come back and give you an update. The account is still where it was last week. Let me just refresh this page. Sign in from the test account to the real one. And so we won October 27th to November 3rd. We apply that. Oh, okay, so it was my fault. It was my fault. I just changed the date to actually reflect the information here on the chart. And yeah, max balance drawdown, current equity, current balance. We have the deposit, withdrawals, win rate, profit factor, and average win versus loss. So yeah. Average trade duration as well, 1 hour, 3 minutes. It's good to be able to see all the extra metrics I was missing out on. But yeah, this is good. We're back. It is the next day, Tuesday, the 4th of November. And real quick, I just wanted to give like a little trade breakdown as to why I didn't take this trade yesterday. So for the people that are following the US 30 strategy, real simple, over and over, I keep explaining it. And if you want to learn more, you can hit me up. I'll like share all this info for free because it's not something that I compiled into like a PDF, like my approach to the NAS 100. It's basically the same thing, but just a little bit more detail on the smaller time frames and a few more confirmations. But it's the same principle of market structure and how the market moves. Anyways, this was supposed to be a long based on the US 30 strategy. We're just waiting for a sweep of liquidity and then any candle close in the opposite direction. We take 50% of that retracement and aim for 1 to 3 with 70 pips stop loss. But the thing about this one here yesterday is because we have that liquidity sweep, we have that large wick there and a small body candle. Then we have this bullish candle close at 11 a.m. So I would be taking this 50% retracement. However, when we drop down to the 15, it's like don't use the 15 in my analysis. But in this case, I just chose to drop down to the smaller time frame so I could see what the price is doing in a little bit more detail. Yes, the higher time frame holds more weight, but on the smaller time frame, you can kind of see what might happen on the larger time frame because of the signals that you're seeing on the smaller time frame, and vice versa, because on the larger time frame, it could be at a very pivotal point or an area of interest on the charts, and on the smaller time frame, you can begin to see what price is doing at this area of interest. So when we drop down to this 15-minute here, I noticed that we have, first of all, very impulsive bearish candles. Though it looked like a wick on the hourly, on the 15-minute, it's fully impulsive, it's fully closing. Then is it a liquidity sweep if we go below the low and then come back up? Or is it a liquidity sweep if we go below the low and close and then a few candles later we come back up? So for me, a liquidity sweep would be if we don't have any full closes, or even if we close one full candle, we have another candle coming back in the zone immediately after that full close. So for me, that would be something like if this bearish candle went all the way down here, and then this bullish candle came all the way back up here above this low point and closing inside that zone. So anything, above that low is inside the zone for me. But what we had here instead was one full bearish close outside and then two, a bullish close outside. So that even though we had that pull back up, it still was not strong enough to come back into the zone. And that could say something that maybe price is closing outside of that low because we want to keep pushing lower. At least that was my understanding with the market. So because of that, and the fact that this candle right at 11:30 just came up and wicked this fair value gap, nothing else even pushed above it to wick it or close above it, that was like, all right, that's confirmation for me. This price might want to go down. I still had no idea that it would be going down at that point. So I couldn't do a counter trend trade, especially because I ain't got no confirmation. So I just let this one go and I left this marking on the chart just so I could be able to explain to you as to why I didn't take this trade and how the higher time frames and lower time frames sometimes come together to give you a more clear picture. So we can go ahead and delete this one right now. And as for now, I still don't have any trades. It's 6:46 in the AM, 7:46 in Guyana, but I ain't gonna be telling y'all the daylight saving, just know we want to be, I know. 6:46 in the AM according to New York time, and I don't have any trades. I'm gonna be trading for the next I'm gonna be trading till the next 3 hours or something. I get to 5 this morning, so I'm being productive this morning. Not. Anyhow, once I find a trade, I'm gonna come back and fill y'all in. I already know the vibe is. You can see what's going on the screen. We entered this trade. I meant to open the camera a bit earlier and start recording, but I was also trying to share it to the community. And then I get distracted and had to upload something. We entered this long on US 30 about 15-20 minutes ago. And it was a buy stop. I sent it out as a buy now because I got hit before I could even send it out as a buy stop. So after I placed it in MT5, you see market's just moving real volatile because we were up a little bit more, like you can see the wick, and then we coming back down like that right now. But regardless, we still in this trade. I ain't give two farts about what the price want to do, but I just thought I should update y'all, and that's how it's looking. I also got a screenshot of like when it now tagged me into the trade. So yeah, I can hold this one, and when we out of this one and come and give y'all an update. I'll also provide a trade breakdown once I come back and give you an update on whether we went to TP or this price reverse and go to stop loss, because as you know, this price is step on, way to step on. But yeah, I'm checking with y'all. And we're back. It's Wednesday. I lost that trade yesterday, Tuesday, even though price went all that way up in our favor. Like I said, it's not over until it's over, because price really and truly could go that close to the take profit. Like, look at this, bro. Look at this. I ain't kidding. I ain't kidding. Price come there, bro. There, away from me take profit. It was like 108 or something pips in profit just to get to 210 pips, and then I was like, nah, I'ma head out. You know, and I honestly, it has happened. I backtested. My data shows that out of 100 trades, 5 of them gonna do this. 5 of them gonna really go close to the take profit and come down, and 10 of them gonna go close to the take profit, come back to the entry, and then go to the take profit. So that's why I mean bringing me stop loss and break even, right? So I'll take those 5 losses if I have to, even though yesterday I broke my rules and I closed this trade when it was 60 pips in profit still, because as you can see there, instead of it being all the way out like that, where the loss would show, I have it there at the end of this candle farm, this bearish candle farm at 11 a.m. because at the end of that candle close is where I took profits for the trade. I didn't want to see it come down to stop loss, being honest with you. And yeah, I re-entered a buy, which was a buy stop, as long as we got above that same candle, which was not a good idea. It's not according to my strategy. It's none of my confirmations. It's outside of the things that I look for. But since I was bullish in the morning, I just thought that that would be a very good area to buy from. I was wrong, and I couldn't be more wrong. And yeah, I paid the price for that. Instead of ending the day with 60 pips positive, I ended with 10 pips negative, because I also risked 70 pips for this year. So hey, hopefully that could help somebody out. If you are up for the day, take you up. Don't go back in. Just don't go back in, especially if the market's doing random shit. Like, you gonna know it's random shit. You're at the charts every day, bro, 24/7. You're gonna be able to identify what's random shit. And yesterday was a little bit of random shit. More importantly though, when we zoom out to the hourly, this trade didn't actually suit my regular confirmation. So even though the second trade was against my rules, the initial trade as well was also not following my rules. If you look at something long enough, you're going to be able to identify a lot more about it than what you were initially looking for, right? Especially if you learn to zoom out and analyze all the information that is there, or if you have specific pieces of information that you're going to focus on when you're doing your analysis, or when you're forward testing and watching the markets live, you're going to begin to notice something, you know, something outside of you, what you're looking for, things that happen in sequence with each other, or things that happen outside of your strategy that lead to a certain result. And that was what I was working off of. I've seen this type of price action before. I know it's not along the confirmations that I look for, but at the same time, I kind of have a memory of similar results or a similar pattern and how it played out. So I trusted that. And it worked, but it's just that since it's not my normal strategy, I shouldn't be aiming for what I usually be aiming for. And then that can cause my risk to reward to vary. I don't want that. So at the end of the day, even though this is something that I kind of have tested before, I kind of have evidence or proof of it working, I shouldn't take it because it's going to cause so many other things to vary. I hope the way I am trying to make sense of my data, of my results, could guide somebody else to use their results the same way, to be able to identify certain things about their system or about their trading that could help them progress along their journey. But yeah, when we come over here to Trader Waves and select the account and date, great. So we're at $75. It actually went up to 78, and then it came all the way back down to 75 because of the loss that I took. When we scroll up, however, I think in the last video I was saying I like the whole calendar view thing, and I was looking for a website where I could have the calendar view. But when we scroll up to the top and we click on metrics, you can actually see the trading history in calendar view as well on this website. So yeah, we have the number of trades, the number of wins, the profit, the percentage. So for November thus far, I'm actually down 1.2%, 91 cents negative for the month, which is cool, you know. So let me see what happens. This is pretty neat. All the information is still displayed here. For October, I actually ended with $9 positive, 2 trades. And for November thus far, I'm down 90 cents. So year to date, 4 trades, I'm up $9. That's crazy. That's crazy. But it's very good to see the information displayed. Anyways, don't have a trade right now. Don't want to make these videos too lengthy. So I'm going to probably close this video off here so I can create a brand new one. Keep you guys up to date. This is the situation. Oh, and I also have that video that I promised you we talk about to change the way how you view progress and, you know, have a more long-term approach to it. But yeah, so far the results are very, very nice. 50% win rate, 4 trades only taken thus far in 2 weeks. And yeah, we're gonna look to keep this going. But hey, if you made it this far, then truly appreciate you. You already know we've been rocking with it for about a year now. The channel is growing tremendously, and I can't leave that. Like, the channel is growing, and the channel is growing tremendously, far more than any other channel that I ever started in my life. So I truly appreciate each and every single one of you. Every comment, every like, every subscribe. And you know, you could always hit me up on Instagram. Instagram is going to be somewhere at the bottom here, and we could connect, you know, ask questions. Maybe I could learn something from you as well. You know, I'm always open to learn new things. Yeah, in trading, you gotta always be willing to learn, to grow. But that's going to be it for this one, and I'm definitely going to catch you in the next one. Until then, peace.
Bye, have a great time.